Jeff Bezos once said, given a 10% chance of a 100 times payoff, you should take that bet every time. But you're still going to be wrong 9 times out of 10. Today, let's talk about such a situation. Hello, if you have been following my channel, then you may remember my deep drill into CHEK Cap, ticker symbol CHEK, back on the 12th of January this year, over 7 months ago. Back then, CHEK had 2 crazy surges during the tech and biotech stocks boom. Right now, I'm seriously considering to load up the boat again. Why? I'll be honest, I haven't been paying too much attention to this play, but once I drilled in and found some big hitters are loading in, that changed everything. Who's buying CHEK? And what's the timeline for CHEK moving forwards? Stay tuned for this and more. Keep it simple. I am not a financial advisor. I am just a simple trader looking for WPG situations. Yes, explosive exponential potential growth. So please note, this is all for entertainment only. No more plugging. Let's start drilling. My first drill 7 months ago into CHEK concluded there could be a massive pop once they received the FDA approval to commence a pivotal trial of their colorectal scanning pill. They got this on the 15th of March, where we saw the stock go crazy bananas on the day. I cashed out over half my position to lock in my original investment around $4 and still kept skin in the game. The stock had recently fell to under $1, which means it's at a very critical point. If the stock remains below $1 for 30 days in a row, then they will get a notice from the Nasdaq for non-compliance and they'll be granted 180 days to regain compliance. CHEK has been here before, if you recall, so it would be nothing new, but obviously for us investors it would be undesirable, as it does pose risk of delisting. At the moment, should we be worried? No. But I think it would be prudent to monitor the stock price for as long as it hovers around this $1 threshold. Okay, so when we take a look at the institutional ownership of CHEK and the most recent 13F quarterly filings, which are quarterly disclosures by institutional investors of their current holdings, we see that the most successful hedge fund in the history of the market has taken up a small position. Founded in 1978 by now billionaire hedge fund manager and mathematician.
The most successful moneymaker in modern finance, Jim Simons, has annual returns of his flagship fund Medallion that have actually outpaced those of Warren Buffett, George Soros, or Ray Dalio. The historically tight-lipped investor has finally spoken out.
RenTech, or Renaissance Technologies, has been the most successful hedge fund across the board. The Medallion Fund, an insiders-only fund, averaged annual returns of 40% since its inception. Now, it should come as no surprise to learn that RenTech adopts a systematic trading system by using quantitative models and mathematical statistical analysis tools. For me, the simple fact that RenTech has taken up a position in CHEK signals something technical is changing for CHEK, and somehow the models they are running at RenTech are starting to make sense for a bull case. Jim Simons once said, "We search through historical data looking for anomalous patterns that we would not expect to occur at random."
Called Chern-Simons invariance. It spread through a lot of physics, and it was amazing.
Taking this narrative, it only points to one thing. Jim Simons believes CHEK Cap will go up. Okay, so who else is loading up on some checkmate? None other than Cathie Wood and her ARK Israeli ETF fund. Holy smokes, this kind of flew under the radar in a big way. I don't see anyone talking about the significance of this, and there's not much news or any news at all that was issued on this. That's maybe because although their position once filed under the 13F will make them, I think, the largest institutional investor of CHEK, it is still, however though, a very small position in the grand scheme of things. On 14th of July, ARK Invest initiated their position with a tiny 500,000 shares and followed this up the next day by increasing it to 3.1 million shares and the next day to 3.2 million shares. Now this is roughly equating to a $3.6 million investment, which is what I meant by saying this is not exactly a massive buy order to generate big time news. Since July 16th though, ARK's position in CHEK has pretty much remained flat, with only some minor selling to balance their overall portfolio. Now, if ARK Invest feel bullish enough to invest into CHEK Cap, then their due diligence must have been overwhelming. And here's some information from the latest investor presentation that could tell us why. The updated numbers regarding colorectal cancer are staggering and are updated to the World Health Organization's database in May 2021. Worldwide, the economic burden is $99 billion, and in the US, it's $16 billion. This is a huge incentive for worldwide health solutions to tackle this third most diagnosed, yet least prevented cancer, and detection, in particularly early detection, is clearly the best way forward. It shows the need and market opportunity for medical detection devices such as CHEK Cap. The total estimated market opportunity for CHEK Cap screening is an enormous $12 billion in the US, $28 billion in Europe, and a mammoth $54 billion in China. This is clearly a metric that both RenTech and ARK Invest must have factored in to their investment thesis. What about the timeline? Well, here they tell us the steps. It is very understated, in fact, that CHEK Cap received their IDE approval and breakthrough device designation from the FDA. Now, we do have a target date of the pivotal trial initiation, which is set for Q1 2022. So in less than 7 months, we should finally see the press release stating this, and that is when the stock could explode to the moon again. They also note in Israel they obtained AMAR, Ministry of Health's approval, and are pending ongoing clinical data collection, meaning they should be doing some form of trials over there. Finally, in the EU, as we knew before, they already have the CE mark granted. Further forwards, we see they are targeting completion of the US pivotal study, filing with the FDA, and FDA approval, all within 2023. So, if we think about it, there is still a long road down the line. Things could change, and I honestly do see CHEK Cap potentially being acquired by a big pharma. Either way, they did confirm they currently have enough cash to see them well into and beyond 2023, so the timeline is not a current issue. I do see though more potential direct offerings if they can have any positive news forthcoming, and once they do initiate the pivotal trial.
Alright, we're all in.
To summarize, I believe long-term CHEK Cap will be big, and its current price of about $1 has no future potential priced in, meaning I believe it is undervalued right now to a scale factor of at least 10. Remember, they hit over $4 when they released news of their FDA approval to proceed with the pivotal trial. If they do receive full FDA approval, say in 2023, I see a 10x on this stock in the run-up and post-approval leading into commercialization. This product is so simple, but it could become the go-to medicinal device for early detection of the world's third most common cancer. Think about that. Thanks for watching, and please note I am extremely bullish on CHEK Cap long term, so please take this drill with additional precaution, and always do your own due diligence. If you are interested in other WPG stocks that I have in my Freedom portfolio, please check out my other videos and just consider subscribing to my channel so you can get a little pop-up when a new video is uploaded. I'm just a simple trader, and I try to keep this simple, and will simply see you in the next video.